Mira Business FM, where business comes to talk.
It's the morning drive, and it's oil and other stories next to recap the major geopolitical development of the last, 96 hours in Venezuela. The Trump administration stepped up its campaign against the country's oil exports through the maritime blockade that we've seen by capturing the Venezuelan president, Nicolas Maduro, and his wife on Saturday on essentially drugs trafficking charges. Now, in the aftermath, Maduro's vice president, Delcy Rodriguez, has assumed the role of interim president, which raises questions about Venezuela's political direction and, of course, legitimacy as well. So this is an escalation that follows months of tension that the US says was aimed at dismantling corruption and restoring stability. And the US President Donald Trump has declared that the US is in charge, that's the quote, of Venezuela. So what do these developments in the country mean for global markets and, for investors here in the UAE, particularly when it comes to oil and also risk sentiment? Dnyanada Kulkarni has spent the last 4 years providing deep dive market analysis and investment strategy across asset classes. She is a senior research analyst at Century Financial, and she's with me in the studio this morning. Dee, if I may call you that, it's nice to meet you.
Thank you. Nice to meet you as well.
Good to have you here.
It's good to be here.
So look, your initial thoughts, first of all. This is it's a huge kind of unexpected story to begin the new year. It kind of took us all by surprise, that's for sure. Is this primarily a political story? Is it an oil story? Is it an emerging markets risk story? Or is it all three?
It is all three, I believe. So even before the capture of President Maduro, the US had ramped up sanctions on Venezuela. And if you see that had impacted the production by 25%, which is already in the doldrums to begin with.
Yeah.
And nobody could have anticipated that, Trump would actually send in forces to Venezuela and capture the president and bring him back to the US. So that has created a little bit of, safe haven demand for instruments like precious metals and gold. So it's also a little bit of an oil story because Trump wants a lot of energy security and stability within the US, and Venezuela has such rich reserves of oil that the US would like to, judiciously leverage and send in a lot of big US companies to the country so that they can begin producing oil and, earning a lot of revenue out of it as well. So I think it's a mix of an oil story, a geopolitical story, and an emerging market theme.
It is. Let's take the oil story first of all. So much of the early speculation has been about oil, of course. It's thought that Venezuela has the largest oil reserves of any country in the world, perhaps around 19%. It's 300 or so billion barrels. So to compare that, put that side by side with Saudi Arabia, proven reserves of 267 billion, something, it's around there, around 17%. The UAE is something, for comparison, something like 113 billion barrels, about 7%. So the US president has vowed to tap into the oil reserves. He wants American oil firms to pile billions of dollars in to fix Venezuela's oil infrastructure and start making money for the country. That's the quote. Immediately, right now, what might or what does that mean for the oil price at the moment?
I think the immediate near-term impact on oil prices, as we saw yesterday, was a mild spike, but that was mainly because of the geopolitical risk premium, because there's more uncertainty now about Venezuela's production and political stability. But I think in the long run, if you see Venezuela, even though it has the largest oil reserves in the world of 303 billion barrels. But if you see their actual production, it's only 1 million barrels per day, which is less than 1% of global supply.
It's tiny, isn't it?
Right, yes. Compared to the 102 million barrels per day, it is just 1 million barrels per day that comes from Venezuela.
Right.
So in the grand scheme of things, any disruption to Venezuelan supply, mathematically it is inconsequential to materially impact oil prices in the long run. For the US to actually ramp up production in Venezuela, it will require years and years of rebuilding the infrastructure, tens of billions of dollars of investment. So if that supply increases, that's not going to happen immediately. And down the line, maybe that could be, again, a headwind for oil prices. But in the near term, it is just going to cap any gains because of the geopolitical premium that we're seeing. Any gains that are happening because of that are likely to be capped.
Yeah, I mean, you mentioned the sanctions that have, I mean, it's severely restricted, is underplaying it in terms of Venezuela's oil output. So right now, I suppose there's very limited immediate oil to flood the market anyway, isn't there?
Exactly.
Yeah, okay. The oil market's oversupplied. Lots of analysts would agree with that. Some note global oversupply. So even if there's a substantial recovery in the short to medium term, in my mind, that shouldn't drastically mean lower prices, should it, really? Because there are other things going on. So it doesn't really, the balance isn't tipped. Am I reading this correctly?
Absolutely, because if you look at the early 2000s, the peak production in Venezuela had reached 3 million barrels per day. Currently, it is somewhere around 800,000 to 1 million barrels per day. So even if they bring it up to the peak levels because of US intervention, again, in the grand scheme of things, like I said, the global supply is estimated at 1 million barrels per day. So any influx of maybe 2 to 3 million barrels per day is quite a small number. So perhaps it could cap oil prices gains because of the geopolitical tensions, but it's not likely to exert tremendous bearish pressure on oil prices, just this event alone.
Okay, and so much going forward depends on stability, doesn't it? What happens next politically in the country?
Exactly.
Yeah, okay. What about longer term for the oil industry? Because the real challenge for Venezuela is infrastructure. Sanctions have drastically cut production. There apparently has been mismanagement. Depending on how events unfold, US involvement would mean massive investment to fix the infrastructure, potentially return things to former glory. So we are, once again, we're full circling. We're back a long way away from an oil surge, aren't we?
Yes, I think there would be a lot of intervention required from the US for a political overhaul to take place. Currently, the vice president has been appointed as the interim president, but the government of Venezuela is asking the US to release President Maduro, and I don't think that's likely to happen anytime soon. So the long-term leadership and governance of the country remains in question. So until there is more clarity about that, even for the US companies to feel confident to spend tens of billions of dollars in Venezuela will be a bit of a question mark. So there would be a lot of things that will need to normalize before that happens. And even when they do enter the US, when the US companies do enter Venezuela, it would take years to rebuild the infrastructure and to, infuse it with the technological prowess needed to actually pull the oil reserves out of the ground.
Well, you said tens of billions of dollars there. I mean, it is huge capital. It's likely to be much higher than that. And given the political instability, the legal risks, and the need for that capital, it's years away. The other thing, and I'm reading about this overnight. I'm no oil expert in any way. I'm aware, but what interested me is that Venezuela's oil reserves, as huge as they are made up of heavier, sourer oil, which is harder to refine. Useful, I read, for diesel, for asphalt, so for applications there. The US typically produces lighter oil, sweet oil, which is gasoline, really.
Right.
But what was interesting to me is the US, has the infrastructure, doesn't it, and the refining capabilities to work with Venezuelan oil.
Right.
So there is, I guess, the opportunity there.
Definitely. Compared to the rest of the world, about 70% of US refineries are well equipped to deal with this heavy grade of crude oil, which has high sulfur content.
Yeah.
So from that point of view, they are properly equipped to deal with it. But the heavier grades require a lot more expense when it comes to storage. They're a little bit more cumbersome to transport. So in that regard, maybe they'll face a few hurdles, but it's not something that's too difficult for them, mainly because the refineries are equipped to handle that oil.
Okay, so that's kind of the main part of the story, the oil aspects really, and
Yes.
it really hinges on the investment possibilities, the stability in the country, and of course the investment is huge. I was reading yesterday. Here's the quotation for you, and I thought this was interesting, and it will back up everything that you've tried to get across this morning. The geology gets the headlines, but the real bottleneck is often people, processes, and operational experience. Heavy oil is unforgiving if any of that is missing, which I think sums it up really, really well. So very complex, multi-year,
Yes.
and many, many years, and also very costly. So those are the oil aspects. What are other factors that could affect the markets? I mean, investors so far, it seems, have kind of looked past the action. Oil prices up a little, no real huge jump. Global equity, bond markets seem to have taken it in their stride. Do you think investors are pricing in real risk, or do you think they're kind of wait and see here? Are they in that kind of mode?
I think from the tepid market reaction that we've seen so far across bonds and stock markets, it hasn't really sparked a significant risk aversion amongst investors. Markets have taken it in stride. And I think the long-term fundamentals, which remain very resilient and strong, are the more dominant factor that are driving market performance at the moment. But of course, whenever there's any geopolitical uncertainty, we see flight to safety to some degree. I wouldn't say a complete flight to safety, but maybe more allocations to gold and silver just as a portfolio diversifier, so that in the event that if this situation escalates, then that can stabilize portfolio returns a little bit better.
Okay. I mean, I know I'm asking you for lots of speculation, but it's all we can do at the moment. You look at the markets much more closely than I do. But do you think events like this typically increase volatility, particularly across emerging markets?
Yes, definitely.
Yeah.
Especially because when there is uncertainty, we see a spike in yields, we see a flight to safety, we see a reallocation of capital so that the portfolios are better diversified. There are more hedges in place to safeguard against exposure to commodities. So we will be seeing a lot of that. But I think that's been the trend ever since last year, especially with the tariff policies that Trump kept infusing into the markets. So I think investors have gotten quite accustomed to such situations.
Yeah, okay. No, that makes a lot of sense. You never quite know what's going to happen, do you?
Right.
From the standpoint of the UAE, and I guess from the region as well, where
Yes.
do you think the impact could be felt most? Do you think, I don't know, in terms of investor sentiment, obviously, or trade flows or energy markets?
I think the GCC and the UAE in particular are very well positioned to, navigate this entire situation, because whenever there's uncertainty, investors flock to jurisdictions that are very politically stable with a very favorable business climate, and the UAE is a bastion of safety. And especially with Saudi Arabia and UAE having tremendous reserves, spare capacity at hand, I think oil prices, because they're priced at margin, they will react positively to that. Even if actual supply from these countries does not increase, just the fact that they have the spare capacity to step in and be there to provide it if necessary, if in case there's any disruption to Venezuelan supply, is a good thing. The other thing is China used to buy a lot of Venezuelan oil at a discounted price, but if there is any disruption to that, then they will likely turn to Middle Eastern countries, which really bodes well for them because that means more revenue for them as well. So I think that's a very positive situation for them.
Okay, because Venezuela isn't priced in dollars, is it? Or hasn't historically been?
I think because the Venezuelan currency has been so weak over the years, and now there has been a shift where dollar is accepted within Venezuela. So that has added a little bit of stability.
Okay.
Yeah.
Do you think investors should be more cautious right now, or are these, the moments when you start to see long-term opportunities? Where do you think we are? I mean, with every problem, there's a solution and an opportunity. It's often said.
Absolutely. I think diversification is the key here. And there shouldn't be a knee-jerk reaction because situations keep changing and evolving. So I think adjusting your portfolios as and when these headlines come in is a more prudent approach rather than reacting to the headlines immediately. I think having exposure to long-term stocks with good fundamentals, blue chip companies across emerging themes or even themes that we've seen since last year, like artificial intelligence, In Europe, we're seeing a lot of fiscal stimulus being injected into Germany. So the defense and infrastructure companies are likely to benefit. So cherry picking and identifying these themes, which are long-term plays and less likely to be impacted by near-term geopolitical tensions, is the way to go. And at the same time, if emerging opportunities come up because of this situation, then gradually building exposure to it when there is, as and when there is more clarity, would be a more sound approach.
Okay, we need to ask you about gold because, I mean, last year, I can see by your smile, I mean, last year was just a whirlwind of a year for gold. Record busting 2025. Obviously, you know, a safe haven asset, people very uncertain in the markets, lots of that due to the tariffs, but there are other reasons, of course.
Right.
And then, of course, record highs in the last week or so, in hours, essentially. What are your thoughts on gold right now?
I think gold is living up to the cliche that all that glitters
All
is
that
gold.
glitters,
It's been
yeah, right.
shining bright. And I think that is expected to continue because apart from haven demand, we've seen central banks accumulating gold and adding them to their reserves by a wide margin across the world, including in China. And I think that's mainly because they want to diversify their reserves away from the dollar. So as long as central banks across the world keep buying gold, that is a catalyst that is expected to support momentum. If we see ETF inflows as well across the world, investors have been piling in. So that is also a very positive thing and a very strong tailwind for the metal. When it comes to other precious metals like silver, apart from these same factors that are driving the rally in silver, there is also a supply deficit. So basically, there is a lot of demand, but its supply is not able to
Just
keep
isn't
up
enough
with it.
around, absolutely.
Exactly. So
Yeah.
that is also driving prices.
I mean, in some ways, that was the precious metal story of last year, wasn't it? Silver,
Exactly.
even more than gold.
Right.
Okay, and that's set to continue.
I think so, yes.
Okay. If you had to sum up what you've seen in the last 96 hours in a line or two,
Right.
or perhaps a paragraph, because I'm not sure you're going to get it into a line, what should markets be watching next when it comes to Venezuela, do you think?
I think the first and foremost thing that they need to watch out for is how the US approaches this whole situation. What are they doing to bring political stability to the country? And what measures are they taking to ensure that US companies can actively operate and, oil and gas companies like Chevron and ExxonMobil, they incurred heavy losses earlier because operations were halted in Venezuela. So for them to continue ramping it up at a reasonable scale will need a lot of political overhaul and favorable policies in place, a change in framework, more cooperation from the Venezuelan government. So these negotiations have to progress smoothly. So that is one thing that investors need to watch out for.
And there's no quick fix here, is there?
No, I don't think so.
No, I think that's what we're all learning. Dnyanada Kulkarni is a senior research analyst, or D, as I'm now going to call you, at Century Financial. It's been really good to have you here.
Thank you for having me.
Do appreciate it. It's the Morning Drive. This is Mira Business FM. Like, subscribe. Always appreciate it if you can do that for us wherever you find us, and get in touch. Tell us what you think. Number of channels to do that. Everything we do is available to listen and or watch again. Find us wherever you get your podcast from. All you need to do is search Mira Business FM.